Now, how should investors be positioning themselves in the current environment? And do the strong earnings from corporate players outweigh concerns in the credit markets? Well, joining me to talk about this and much more is Jim Rogers, chairman of Beeland Interests and the author of the book Hot Commodities. He correctly predicted the commodity price rally in 1999. And Jim joins us this morning, Friday morning, from Hong Kong. Jim, welcome to the program.
I am delighted to be here, Pimm. It's good to see you again.
Jim, give us your perspective on what's going on in the U.S. credit markets. A lot of people have been saying that, well, the subprime problems are really going to be contained to the housing market, to the residential housing market, and that really the credit tightening is really overdone. What's your perspective on that?
Well, quite the contrary. I wish you could finish a bubble off in 3 or 4 weeks, or maybe even 3 or 4 months. Whenever you've had a bubble in any asset class in the history of the world, it has taken a long time for the bubble to be cleaned out. This was one of the biggest bubbles we've ever had in credit, and it's got a long way to go before it gets wiped out.
Now, Jim, you've been quoted in the past as saying when you looked at the tech bubble, you said that even your mother at that time knew it was a tech bubble. Why have people been so sanguine about what's going on in the housing market right now? Is this a question of them talking their own book?
Yes, Pimm, yes. My mother even knew that there was a tech bubble back then, you know, but there was one person in the world who did not know we were in a bubble, and that was Alan Greenspan. He said he did not know it was a bubble, but everybody else did. Now, this bubble, people have just been overlooking it, or maybe it's the fact that everybody is always so optimistic on Wall Street. But, Pimm, remember that in housing in America, you always had to put some money down when you bought a house throughout American history until the last 3 or 4 years. This is the only time in American history, or world history, when people have been able to buy houses with no money down, and in fact, in some cases, the builders gave them the money for a down payment. So this bubble was the worst we've had in housing, and it's going to be the worst before it's over, cleaning it out.
Jim, as someone that watches what happens to international trade and commodities, to a certain extent, have U.S. financial institutions commoditized subprime loans and, in effect, traded them overseas? Have we exported a lot of these problems?
Well, we certainly have exported a lot of them, but not just us. I mean, investment bankers in Europe are doing the same thing. Even in Asia, they learned how to package some of these subprime loans. Of course, mainly in America we did this, but we taught the rest of the world how to do it, and the rest of the world started doing it. So you're starting to see banks and institutions in Europe losing money. You're starting to see banks and institutions in Asia losing money because they own a lot of this stuff. And by the way, Pimm, some of them still don't know how bad it is yet. I suspect that we have the CEOs of many institutions saying, hey, do we own any of this stuff? And he's going to be shocked to find out how much they own.
Briefly, Jim, would you be still shorting the U.S. Financial companies?
I am still short. I have been and am short the investment bankers in America, yes. I continue to be. I am also short home builders in America.
Jim, let's talk a little bit about Asian markets. You've been very bullish on Asian markets, but you also recently have pulled out of some emerging markets. Can you tell us why, and which Asian markets would you still be investing in?
Well, Pimm, I've sold out of all emerging markets around the world because they got all overexploited. I hated to do it. Some of them I've owned 15 or 20 years, but they're all been run up much too much by people who are indiscriminately buying stocks. I hope that when the collapse comes, if it comes, I'm smart enough and brave enough and liquid enough to buy them back, or buy some of them back. I still own Japan, which of course is not an emerging market, and I own China. But other than that, I've sold out of just about every emerging market, and all the markets in Asia.
Now, Jim, you've been quoted in the past as saying that luck always follows the prepared mind. What should investors be prepared for if they want to get into Asian markets, or specifically Chinese markets, right now? Should they wait for a pullback?
Well, I would. It is amazing, Pimm, how lucky I get the more homework I've done. I would be looking at China very carefully. Some Chinese stocks perhaps you could buy now, but China's in the middle of an incipient bubble. It's not a bubble yet, but if it doubles or triples again this year, then it would be a full-fledged bubble. I hope it goes down. But everybody must understand that China is the next great country in the world, and we must learn about investing in China because that's where fantastic fortunes are going to be made in the next century.
Do you think that trade within Asia, specifically if you're talking about countries like South Korea, Japan, do you think that they're going to continue to benefit from China, and would you be thinking about getting into those markets if they pull back?
Well, that's another way to play, yes. You know, Canada, our neighbor to the north, is an extremely rich country because it has a rich neighbor. Well, all of China's neighbors are going to do extremely well in the next three or four decades, so you can invest that way as well. Vietnam, for instance, is going to be a huge winner in the future. Lots of countries. Figure out who's going to make a lot of money off of China and invest accordingly.
What about the real estate sector?
You probably...
Sorry, Jim, go ahead.
Well, what I was going to say, 30 years ago, 45% of Japan's trade was with the U.S. and 25% was with Asia. Today, it's reversed. Approximately 45% of Japan's trade is with Asia and 25% with the U.S. Asia is booming. There are 3 billion people out here, Pimm, and they're all working very hard and saving and investing their money in order to improve the standard of living. So Asia is now its own self-contained unit, if you will, of 3 billion people getting ahead. As far as real estate, well, I wouldn't buy real estate in Shanghai right now or Beijing. These have been very hot property markets. The Chinese government is trying to cool them off, and I suspect the Chinese government will cool them off one way or the other.
What's your estimate for when we're going to see a free float of the yuan? I mean, we've got the Beijing Olympics coming up next year. Do you think that we could see a free float by then?
Well, I would expect we would. I don't think that China is going into August of 2008 with a blocked currency, because part of the reason the Olympics are there is to show that this is a modern, developed country. So I would suspect by the Olympics they certainly will be free-floating. Conceivably it would not be, but then remember there's the Shanghai World's Fair in 2010, so certainly within the next 3 years, if not sooner, much sooner, I would expect sooner, you're going to see a free float.
Jim, what do you see in terms of interest rates in Asia? We've got Japan with very low interest rates. It seems to be actually fueling the carry trade, people borrowing in yen and then speculating in other currencies. Do you see that that can continue?
I want to go back to one thing, Pimm, as far as the free float of the currency. It would help if the United States would keep their mouth shut and leave the Chinese alone, because then I suspect the Chinese would let their currency float even faster. But when the United States is hitting them over the head saying you must do as we say, naturally that causes people to get their backs up. So if we shut our mouths for a while, I think it would help the free float. Now, I'm sorry, the second part of your question.
Now that you mentioned that, Jim, let me ask you, you know, Henry Paulson, U.S. Treasury Secretary, he's in China for talks about this. Do you think that the presence of the Treasury Secretary, in a sense, makes it more difficult for the Chinese to loosen up the currency?
Of course it does. I mean, what would happen if the Secretary of the Treasury from China came to America, went to Washington and said, this is what you have to do? Can you imagine the hue and cry in the press and in Congress and in the White House if somebody from China came and said, America, this is what you have to do? Oh, my goodness. We'd never do what they said, even if it was the right thing to do.
So would you be actually selling the dollar and buying the Chinese yuan right now if you could?
I own the Chinese currency, the renminbi, and I am selling the dollar. I sell the dollar all I can. The dollar is a terribly flawed currency. It's got huge problems facing it down the road.
What about the Japanese yen? Let's go back to that issue of the low interest rates in Japan and the carry trade. Do you think that the Japanese yen is going to strengthen against the dollar? It has against it's weakened against the euro too.
Well, I've been buying the yen and the Swiss franc because this carry trade has gotten to be tremendous, and it is beating down the Swiss franc and beating down the yen. So when it reverses, there's going to be a huge explosion up in the yen, a huge explosion up in the Swiss franc. So I'm sitting here buying it while all these other guys are dumping it and playing their financial games, some of them very successfully, I might point out. But in the end, the yen and the Swiss franc are going to skyrocket.
What about the euro? Do you think that the high value of the euro is going to produce any kind of dislocations in trade or imports and exports? Obviously, facing a very weak yen, European exporters do have that to consider.
Well, I also own the euro as well, although not nearly as optimistic about the euro as the other two currencies I mentioned. Of course, it's having an effect right now. Will continue to have an effect, but it's not enough. It hasn't moved up enough so that the dislocations are terribly serious at the moment. It'll affect some people, but it's only marginal right now.